and I'm very grateful to the Peterson Institute has for years been involved with studying Latin America, going back to our initial days with John Williamson and the so-called now ever forever trademarked and overused Washington Consensus, but right up through the present. Since our trade practice has taken the lead in recent years with Jeff Schott and Barbara Kochwar and others working on that, we're very pleased to now have Monica de Bola from Brazil has joined us as a visiting fellow, and will be helping to beef up our work on not just Brazil, but on macro in the Latin American area. But today we are very privileged to bring in a member of the community, and then I'd like to think friend of the community. Jose De Gregorio, who's speaking first, has been a non-resident senior fellow here at the Institute for the last year. Jose published a book with us on how Latin America weathered the crisis, coming out of his sensational Sunrise Foundation lecture here. And since then, we've just grown closer, and it's a great privilege to have Jose as a friend and a colleague. He is, of course, also a professor at the Department of Economics at Universidad de Chile, forgive my pronunciation. And for those of us with our central banking hats on, which is really today, he was governor of the Central Bank of Chile from 2007 to 2011. He had been vice governor and member of the bank's board before from 2001. He previously was Chile's Minister of Mining, Economy, and Energy, a headache that I'm glad he got away from. And he has long been active in Chilean finance and monetary affairs. He started his career as an economist of the research department from the IMF after rocking the world as an MIT grad student. And TA, I gather, to some of the people in the audience. He will be giving a broad overview of the developments in Latin America, and will be followed by Ilan Goldfajn, who is chief economist and partner of Itaú Unibanco. Again, forgive my pronunciation. For purposes of identification, of course, Ilan was deputy governor of the Central Bank of Brazil from 2000 to 2003, which he was really the chief economist and head of research. Currently, he is also a director at, I'm not even going to try to pronounce it, a major Centro de Debates de Políticas Públicas, which I think I know what that means. He is at the center of public debate on policy in Brazil. He's been a director of the Institute of Studies of Political Economy, a founding partner of a hedge fund based in Brazil. He also previously was a partner at Gouveia Investments and various consulting firms. Like most good folks, he did his time at the IMF early in his career, and of course, also has a PhD from MIT. As a Harvard PhD, I guess I can accept that. My privilege to invite Jose to lead us off today and reach not only the people in this room, but the thousands of people watching online around the world. So, Jose.
Thank you very much. Well, it is a pleasure to be again here and to talk about the region. I like what Adam says. It's not just US, China, the world. It's also Latin America. Unfortunately, some years ago, we would say it is a very successful story we have to see, but now it's not as successful and it's struggling, I think, and there are a lot of challenges. So what we see in Latin America, and before going to the details of Brazil, which is 40% of Latin America, but what we see in Latin America in this was a very rapid recovery. Never Latin America had a recovery faster than the one that had after the global financial crisis. But then it came the slowdown. And it came a slowdown that was, to a large extent, a surprise. Here you see the dotted line is what the IMF was expecting 2 years ago for Latin America to be per capita GDP. and we see wide variety, but except for the case of Colombia, that I will make some comments later on, it was very disappointing. All countries in the region were quite disappointing, and this is not just, it's not to pick on the IMF forecast, because this was private sector forecast, there was consensus forecast, government forecast. So it has been quite a disappointment. Of course, there are extreme cases as Venezuela, more recently also the case of Brazil and Argentina, and I won't refer about Argentina and Venezuela because it's very easy to criticize populism. I think that the key issue today is why countries that have been doing and were doing very well, they are not so successful. This is another way to see this. What I have here is the first two bars correspond to the 2 years ago forecast and to the actual growth in Latin America. And the red bar is the difference. We saw that Brazil 2 years ago, people was very optimistic, thinking that we would grow at 4% and just grew at 1%. Next year, it is expected that we decline, these are the following bars after the red, will decline 1%. And many market view maybe even up to 2%. But the same in the case of Chile, that was expected to grow much faster, about 4%, and just grew 1.8%. Colombia is the only exception, but then we have Mexico, which is a very successful reformer, also not growing well, and Peru, which is quite surprising in the case of Peru, because Peru came late to this deceleration. Most deceleration started in mid-2013, after these forecasts were made. But then Peru was quite dramatic. It was expected to grow at 6%, and they just grew at 2.4%. So it has been quite a deception in Latin America. The first thing that I would like just to say and try to explain this is that this is not a result of the decline in the terms of trade. We tend to blame always, as a policymakers, we tend to say that all good things are because of us and all bad things are because of the external environment. This time, what we see, there is a line when the deceleration started. Terms of trade were lower, they were declining, but it was nothing dramatic. The dramatism, I think, that would have come this year with the declining oil price, with the sharper declining copper price, and, well, iron ore started before, but if you look at this is a very difficult to get, but there are many different series for terms of trade, but this is quite reasonable, and what we see, there has been some softening since the peak after the crisis, but there hasn't been a decline in terms of trade that has had a huge impact. I think that the challenge for terms of trade are this year, not last year. Now, despite that, being a commodity exporter is not it also has some implication for the business cycle. And I think that the point that I would like to show here is that first, this is common for all non-advanced economies, the growth surprise. So this is, despite not being terms of trade, because we can see most countries have had a negative growth surprise since 2 years ago for the year 2014. But in the case of Latin America and commodity exporters, this happened also in Australia, many countries that you can gather data. Commodities have not a direct effect, especially metals, and they don't have a direct effect on income. They are sectors, in the case of Chile, to a large extent public, and that's a cushion with a fiscal rule, so its effects are very minor on an income side. And also, we have that in the case of corporate, and the other are foreign companies. So it doesn't have a strong income effect, but it has a huge investment effect. There is an investment cycle associated to commodities that exacerbate the business cycle. What we saw in the case of Peru and Chile was almost a 4% of GDP increase in investment since the mid-2000s to the late 2000s. And this is just investment in mining. This doesn't add what this have on the effects on the construction sector, and then it has also some impact on services. So, and what we have seen last year was a decline in investment, despite what's happened, regardless what's happened with prices, because projects were in the pipeline, they had a lot of projects, and they were developed fast because they wanted to take advantage of prices. But now, of course, it comes a difficult part of exploration and new projects, and this has been having, and also not such a good prospect in copper price. So at the end, this have magnified a lot the business cycle. Something of this has happened also with oil in Colombia, but Colombia to some extent was offset by a large project of public investment that's coming to an end, and that may explain why Colombia now is joining very rapidly the deceleration. For this year, Colombia, Chile, Mexico, roughly Peru, they will be growing at about 3%, and the rest of the big countries like Brazil or even Argentina, Venezuela will be shrinking. So one thing is the cycle, and the other thing, we have been perhaps too optimistic about long-term growth in Latin America. And now, well, we always come, and it's very difficult to say what's long-term growth in Latin America, but we tend to forecast this with what has happened in the past, and the past was good, so we tend to be too optimistic. There's two pieces of evidence that I think that are quite relevant, and perhaps the most dramatic case is Brazil, that I won't go in details, that point that economies have very low productivity growth. The first one is what has happened to unemployment. Unemployment went up during the crisis. Then what you see more recently is that despite the deceleration, 2-3 percentage points in most countries, unemployment rates have not gone up. So employment growth is low, but also labor force growth is low. There is so we are basically in a world with a very without. More recent, in the last month, there was an increase in Brazil, but that green line. But what you see, we're very stable. Even in Peru, in most countries in Mexico, unemployment rates during last year were declining. In Chile, just increased a couple of basis points, a couple of 10 to 20 basis points. Now, what is interesting about the case of unemployment is that if you are decelerating and unemployment is not going up, it's because you have no productivity growth. And what we have learned from Okun is that in the long run, when you grow at potential, unemployment rate is stable. And roughly this is what we are seeing in Latin America. In Brazil, has not been growing for the last 3-4 years, and unemployment is record low. So I think that this is a first piece of evidence that says that a good thing, which is to have low unemployment rates, has also a negative side, which is low productivity growth and signals that the economy is growing, that they're very close to potential. Exactly how much it is a discussion, but this is. And the second, and this is for the case of Brazil, is that inflation has been, this deceleration has not brought disinflation. Now, there are one thing that is important to bear in mind is that this inflation, the increase in inflation in Latin America is to some extent the result of the depreciation. So there has been a depreciation, there is a one-off increase in inflation, and most countries are above their midpoint of their targets, even above the comfort zone. The case of Brazil, very high inflation for normal standards, not for Brazilian history. So I always want to put this in perspective. We're talking about countries that are going close to 10, which is outrageous today. It was not outrageous in Argentina or in Venezuela, or 20 years ago. But Brazil, and this is another indication, when you have inflationary pressures, what we have learned always is because you are close to full capacity. And if you are close to full capacity and growing very little, it means that full capacity is growing very little. So I think that this is another piece that says, well, there is an inflation challenge. While economies haven't been growing so fast, it seems that we are relatively close to capacity, different across countries. What will happen, we see even that in the case of Brazil, monetary policy has been sharply tightening, and in a world in which they have rising inflation and very low growth, also are all the indications that the problems in Latin America today are not like were before. Macro demand problems are productivity problems, are much more related to productivity than to macro policy. Now, there is a discussion in the region whether monetary policies could tighten or could loosen a little bit, depend on the country, depend on the inflation outlook, but above all, it depends on what the U.S. will do. Because basically all central bankers are waiting for the U.S. to move in order to see what will be the world next day that the U.S. moves, and then we can do it. If you have a huge appreciation and perhaps it may not be the moment to start loosening. So basically in Latin America there won't be a sharp. It's unlikely that there will be moves before the U.S. moves. So we are all waiting for the U.S. to move, so the rest of the world will start moving. And just to start closing, depreciation has been quite sharp in the region, and this is good. It's something recent of the last 10 years. Take the Brazil and Colombia, 100, January 13. Now, depreciation is about 50%, with limited pass-through, which makes this really a shock absorber. The case of Chile is close to 30%, but start first. You see that the red line was, since early 14, was the country that depreciated the most and depreciated first. Concerns about Peru. Peru is the only country with fear of floating in the region. They accept that the exchange rate depreciate, but they don't like it too much or too volatile. Mexico is a different case, it's too close to the US. But I think that this has been important. But the puzzle is that the current account hasn't adjusted that much, except for the case of Chile. This is deficit in the current account. So it's a positive number, it's a deficit. And then the first two bars are the current account predicted 2 years ago and the actual current account. And then there is the 2015 and 16. And what we see is that, except for the case of Chile, many countries, even Peru, that was declining growth, without extreme and large shocks in terms of trade, because that's coming this year, without they are having a current account, not an adjustment. It's not a big deal. These countries have access to capital markets, but this shows that in a moment of even more problems with the terms of trade, they could have problems, and perhaps their currencies still have more space to go, or that there are lags that will take time for the current account adjust, but this is a problem. Let me just close with the risk for the region. First, the first risk, as I said, is commodities. China. This is participation of China in Latin American trade. First bar for each country is the early 90s. The recent years is the second line. China is red. So what we see is that China has increased participation. It's not dramatic. I have this also with half of it is commodities. There are some industrial products, or I would say products very linked to commodities that they export. Chile is the most exposed to China, and Brazil to some extent, but the deceleration in China may have effect on commodity prices. It won't have that many effect on the volumes. And the margins that we're talking, I don't think that China would be to blame for two different economic outcomes in the region. The second thing is the tapering and the U.S. tightening monetary policy. We all in the world, when you are a policymaker, you have to say why you worry. You have to say something that you worry about. So that's the first rule. And the first thing to worry about today is that the U.S. will raise interest rate, and this can create shocks. Now that I'm not a policymaker, I can say I don't think that risks are too large. That I worry anyway. But why? Because we had tapering. We have the announcement, the taper tantrum, when Bernanke said that they will start withdrawing the QE stimulus, and what we saw was a huge wave of increasing rates all around the world. There you have most emerging market Latin American countries and some commodity exporters. We saw up to even 350 basis point increase in 5-year rates. The case of Brazil, Turkey, Indonesia, countries quite important. But of course, currencies depreciated, which was the offsetting effect, and I think that that's what may happen. Now, what's coming in the US and what's coming in the global economy is the most announced policy action in the history of humankind, which is that the US will raise rates within the next 3, 4, or perhaps 6 months, and by 25 basis points. It's not a big deal. So markets, I don't believe that markets are frictionless and perfect, but they are not so irrational to not to have this information in asset prices. So I think that there may be some concerns in the region, but nothing too dramatic to create some crisis in the region. And finally, I always like to close with this. Latin America has a deep problem of productivity and has a deep problem of social inclusion. Latin America is one of the most unequal regions in the world. there has been made progress. That graph shows in 1990 the Gini, and in the vertical axis in the 2012. What we see is that most countries are below the diagonal, so there has been progress. But still, inequality is much higher than in countries that deteriorate. So we have a world in which equal countries complain because inequality has deteriorated, and Latin America complain because inequality is high. But everywhere there are complaints in inequality, and this is a problem in Latin America. This is a problem, I think, the problem, this is a summary statistic of all the concerns that we have, many political crises in most countries in the region today, associated to cases of corruption, of many things that are going on, political financing, and which are quite, of course, very difficult to handle in terms of where the region is going, especially when it's a region in which you need, of course, social inclusion, but you need effective, you don't need populism. We had many bad experiences with that. And where we also need productivity growth. So we have to look at ways to create a space for more productivity growth. And so this brings to challenges, longer term productivity growth in Latin America, social inclusion, and of course, institutional reform that we still lack very good institutions. Thank you very much.
So, good job, Pepo. It's a pleasure to be here. Thank you, Adam. Thank you, the Peterson Institute. I was hearing Jose De Gregorio presentation on Latin America. I remember the joke the other day we were talking in dinner, when you ask about Latin American economies, about Latin America, how is Latin America doing? But be very concise. Good. Okay, you can say in 2 words, not good. So I think that's basically what I understood from what we had presented. And I think I'm going to go deeper into Brazil. But I think we should start with a bit of Latin America, just 2 slides. So what is my main point? The party is over in Latin America. I mean, we can discuss with Jose whether how much is permanent, how much is cyclical, but the party is over. Now, the party had different effects depending on the country. In the case of Brazil, there is more effect, and this has to do with their own policies. So there are policies that magnified the shock, and there are policies that buffer the shock. Governments have fallen everywhere. In Brazil, they have fallen a lot. It's probably the record fall in popularity in, how do you say, humankind? So we had the election, the government is 3 months, and the popularity is almost 10%, the support. So probably the record low. So what has changed since the elections in October? I'll tell you what the people saw up to October and what has been the change more recently. And finally, where do we go from here? What are the scenarios? I call it the adjustment season has begun. You're adjusting everything from water to balance of payment to fiscal to quasi-fiscal to whatever. Everything has been trying to change course. Unfortunately, you're doing it at the same time with very little political support. So why do I say the party is over? Well, the first column, growth in the last 10 years, and the second column is last year, this year, and the forecast for next year. Independent if you have the policies of Argentina or you have the policies of Chile, they're all falling. There has to be some common factor. Of course, the degree of the deceleration will depend on institutions, on the policies, on everything. So you have recession in Argentina, you have some recession in Brazil. Remember, this is not 1 year, this is in the next 3 years. So you have a huge recession in Brazil this year, but we don't expect it to be for the next year too. And then you get, what is the common shock? Could be several things, but my main suspect is commodity. This is 100 years of data just deflating. the common CRBs, and we had like three big booms in commodity, and this one, the last one, just fell. As you see the line is the consensus forecast for commodities. So basically people say, it fell, it's done. I'm not sure if we're not going to have some overshooting before we go back, which will be even worse for the region. But at least I don't expect this shock to be over in the near few years. I mean, so this shock is permanent. This is not a prebish, whoever still remember. This is not terms of trade. Terms of trade is more like what Jose showed, but this is commodity shocks that I think is quite important to understand that the party is over, there are permanent shocks here. And when there are permanent shocks and the party is over, popularity falls everywhere. So from Peru's policy to Mexico to Chile to Argentina, everybody is under the water. Suddenly you have corruption allegations from large ones to small ones, but in every other country, authorities are under problem. So there has to be some endogenous thing to this. The tolerance to problems, to corruption, has to be related to this shock. And this is Brazil, so the following going to be Brazil. This was the election of Brazil. Red, you can imagine who is red. Then you have blue, and the country is basically divided. It was a 50.5 to 49.5. And you can always, the guys from the south can blame the north, but at the end of the day, the opposition lost the election because the red invaded the blue part there. So you did not lose it really because of the north. You lose it because you could not win in the south what you needed. And here's the approval rate. It was not great. You see the fall of Dilma's support from 65 to 30. Those were the demonstrations in 1993. People already felt that something was going wrong. But it was not a disaster. Disaster happened now. So this is the record. Something happened since the elections now. And my take is that before the elections, the government had something to show. When I tell this to my friends in the opposition, they say, no, there was nothing to show. It was basically they lied and there's marketing, which is true. But there is this too. You look at unemployment. Unemployment was record low in October 14. If you had to engineer that, which I don't believe they engineered, I think there is some part of luck of the cycle of the lags in unemployment. You could not engineer it better with unemployment going down and suddenly they're not going, and it's not going to stop. So I believe unemployment will go up in Brazil, and we can discuss it. I think unemployment will go up in the region. I think productivity has gone down, but not so much. So I think unemployment will go up in the region. But Lula has something to show on the distribution, on the poverty. I mean, we cannot just put it and say this has nothing to do. You could always say this is part of this was a product of the party, okay. But I think there's a permanent impact. So what happened later? Well, we have a deceleration that has come from 4.5% during the heydays to 2.1% the first Dilma government, to 0.1 last year, and minus 1.5 during this year. If things go well, which is my interrogation there, question mark there, you'll have an average of 0.7. So if there is a recovery, you'll get a 0.7. So things are much worse as we start. And if you look at formal job creation, it is not a phenomenon that started in the last 3 months. The country was not generating employment, certainly not in employment. You see that there's negative numbers since the last 12 months. But unemployment was kept low because participation rate was still going down. And we can talk, I don't have time to get into the details, why did participation rates were going down exactly now, but we can talk about it during the questions and answers. But the issue is, this was not going right, and the question is, what happened? So I like this Rudy's quote that always says things take much longer to happen. So we spent the last 4 years, and if you want, like 6 years, saying policies in Brazil are completely wrong, and nothing happened. Maybe GDP growth decelerated, but popularity was high, and suddenly, 2015, there was election, and popularity goes to 10%. You're under recession, 1.5%. Things happen much faster. So what happened? First, global. Party's over, both global boom and easy money is disappearing, and commodities. That has to be number one. Number two, long-term structural issues. This is a country that productivity is low, tax burden is 40%, very closed economy. When the tide is down, you really look naked. Third, and not least, the reaction to the new reality was wrong. What does it mean wrong? You basically tried to replicate the present, some past that did not exist. So you did not realize that the shock is permanent, so you stimulate consumption, you stimulate debt creation, you gave tax breaks, you stimulate, say, well, this is just a demand issue. It's a cycle. If you do countercyclical policies strong enough, you'll get over. You ended up with problems. You ended up with a primary surplus, which is the way we measure the effort, between 3 and 4% in 2008, going down all the way in a recurrent way to minus 1%. So you basically destroyed between 4 and 5% of a surplus. And then your nominal deficit last year was 6.2%. So a nominal that was around 3% jumped to 6.2%. So that was the stimulus part. And while we forecasted in 2013 that the net debt will basically remain relatively constant after years of falling, when you basically extrapolate the last data, you will find something like that. So something had to be done. You cannot start a new government and not get a downgrade from the rating agencies and downgrade from markets. You had to do something. And what you did, you basically tried to do a plan that will not really stabilize the debt, but the dynamics will be much better than before. So the targets today will give you, if fulfilled completely, they will give you a debt that will increase, but it will increase relatively slowly, which gives you more time for other things. So what to expect in the next years? I think there are two scenarios under Dilma 2. So when I give this presentation in Brazil, I say, 2 scenarios under Dilma 2. And they ask me, aren't there any scenario with no Dilma 2? So here I'm assuming there are Dilma 2 is there. And I think there are 2 possible ones. One is that you cannot implement the adjustments. The adjustments are very important to get out of these bad dynamics. My basic scenario is actually the modeling from, which I used to call minimal adjustments, and I don't like the minimal adjustment name anymore. What does it mean, minimal adjustments? You'll do whatever is necessary to avoid the other scenario. So you are a leftist government, you appoint a Chicago PhD to run your finance ministry. Why? Because you don't have choice. Survival instincts. Once you get better, and you're out of the cliff, nothing happens until you get closer to the cliff and you have to do more. This is the minimum adjustment scenario, and it's my basic scenario. It's a scenario where policies will work to avoid the crisis, but they will not do more than that. Maybe in the next, when Dilma 2 is over, then you have options, you have major reforms that will push growth from maybe back to 3%, 4%, not 4.5%, which is, I think, it's a new normal. Maybe you'll do some reform that will just keep growth at 2%, 2.5%. And maybe if you get into a crisis, then you have opportunity to do the reforms. Or maybe, and this is the worst scenario, you get into populism. Somebody says, look, everything is wrong, I have here the solution. The only problem I have with the last scenario, which is populism, is that populism does not live without money. So that when oil prices are low, when commodities are low, you don't have money, we tend not to see so much populism. They tend to disappear. So I think it's a more difficult job. So what Brazil is doing now, it's not doing reforms, it's doing fixes. One of them fiscal. Basically, you need to go back 2 or 3% of GDP of surplus. You're doing quasi-fiscal, which is everything that does not go into the budget, we call quasi-fiscal. It's the lending from the public banks, BNDES, Caixa, Banco do Brasil, is the subsidized interest rates coming from government. And there are a lot of type of funds that do not go through the budget, but are very important. You are adjusting both. So interest rate on BNDES is going up. Money BNDES disbursements have gone down by 40%. Everything is moving. Third adjustment, balance of payment. Government was intervening quite a bit. He decided he's out of the market. The currency jumped up to 3.3, went down a little bit to 3.1, but the need is for an adjustment in that deficit that you have of 4%. Then you have regulated prices. That was also one of the policies of the last 4 years. Electricity prices this year will go up by 60%. I have never seen this number in Brazil, and I have never seen this number for 1 year in any other country. I won't say humankind, but it's 50%, it's a lot. So a very strong adjustment in regulated prices. Inflation will go up to 8%, which is very high for Brazil since '94. And you need to get it back to the target, and the central bank now is trying to regain credibility. At the same time you're doing fiscal policy, at the same time you're doing regulated prices. I have nothing against doing all what you need. My problem here is that there is very little political capital to do everything at the same time. So there's clearly risks of implementation. So when they ask me, what will you suggest? Won't you do the fiscal? I say, you have to do the fiscal. You have to do the quasi-fiscal. But maybe the monetary is too much for the current government, because you will need a recession, which now we forecast 1.5%. You may need a recession going to 2 to 3% in order to get everything in such a short period. And people are on the streets already. So let me just jump. My last was just to say, you have to focus on productivity. Labor growth is not there because population growth is below 1%. Capital is going to be difficult for a country that saves 14% of GDP. So how can you invest much more without a current account deficit that you try to somehow close? So you will need clearly to do more with less, and it will have to do for the supply side. So my main point here is Brazil is doing fixes. I think it's going the right direction in terms of adjustment, but zero probability of reforms that will make productivity because there is no political capital at this point. So that's it. Basically, what I say is the party is over, not only in Brazil, everywhere. The party in Brazil took longer. Everybody left at 2 o'clock in the morning. We stayed until 5. There's hangover. What changed? Now you're adjusting. Unemployment is up. Whoever voted for the president is feeling betrayed. So the 50.5% are feeling betrayed, and the 49.5% are still opposition. So everybody is against. And where do we go from here? I think the adjustment is for real. I think Joaquin Levy will continue. I think the government will have no option to give him the support. But what you're going to have is just minimal adjustment, no reforms. So a muddling through is probably the most likely scenario. Thank you.
Thank you very much, Ilan and Jose. It's really great to have the authoritative clarity of people who've been in the policy seat and who have the analytical chops to go with it. Both of you did a very good job of embedding this in the broader Latin American context, but I'd like to push you a bit on a couple questions before we open it up to our distinguished audience. The first is just straight out as ex-central bankers. So Ilan made the statement that, you know, maybe you hold off on going too aggressive for the inflation target in the near term in Brazil. And yet, what we saw looking at Jose's charts is actually in some ways the biggest divergence of Brazil and Jose's charts was the green line of the interest rate in Brazil shooting up in a way that wasn't the case in any of the other major economies you were looking at. Now, I mean, you can say that's simply a question of the level, but where do you, is this a sustainable scenario? I mean, is this really risk-free that they can put off doing an exchange rate adjustment, they can put off doing an inflation adjustment? This doesn't look to me like an entirely stable situation, especially in a world where Selec's in double digits and Germany's in negative. I don't want to be overly negative here, but you know, how stable is this monetary situation?
I don't think it's, I think the whole situation is unstable. I mean, my basic scenario is that you will end up having a reaction function that will try to adjust when things go bad, but it's unstable because you don't really have, you overdid it in the last 4 years, and now you have to adjust. It's basically unstable that you can do the adjustment that you did not do in the last 4 years. In monetary policy, it's the same thing. When government was expansionary in terms of fiscal, in terms of quasi-fiscal, monetary policy was, in terms of Brazil, we will not discuss levels because if you discuss interest levels in Brazil, we can spend the whole panel. But just the variation, you were overly expansionary in terms of monetary policy in the last 4 years. You had credibility issues going on for the last 4 years. So for example, when you look at inflation expectations, they're all high for the long term. 5 years show high inflation. So that you need to regain credibility. And I think what's happening in the central bank today is that they are willing to regain credibility, and that's why interest rates have gone up. The lowest number was 7% nominal, right, but inflation was 6.5%. So for Brazil, a number below 1% is really expansionary. Huh? I'm sorry to tell you, but this is, so you have, and you know now because you have to go back to 13%, and the job is not over. So you have 30% real rates, interest rates, and you may need to go much farther in order to bring inflation back to the center by next year. If you ask me if this is the right policy, I say yes. That's what you need to do. Yeah. However, as you mentioned, this is very unstable. At some point, if it's not the government, if it's not the low popularity Dilma that will push the plug, maybe it's going to be the Congress that will push the plug. And if it's not the Congress, maybe the streets will push the plug. So my statement was more political than about the right economic policies.
Yeah. Just one comment regarding that, because I have always talked this with Ilan for a very long time. I said, how can a country survive? Let's say with interest rate at 16%, they are able to control inflation at 6%, and they have a 10% real. So you have to be super productive in order to grow. But then I discovered, well, among many years of conversations, and today, half of the intermediation is done by development banks, half of the intermediation, roughly, at 6%, 7%. So monetary policy is impaired. Monetary policy cannot do the job, and that's why it has to go to 16. If monetary policy would be all over the credit conditions, we could have a much more normal monetary policy. So I think that this is not to blame on the central bank. The problem is an institutional problem in Brazil, that what they need to do is to have market rates for development banks, and then you can have a serious normalization of monetary policy rates. It's the only country, right, it's the only normal country, I would say, Brazil, that has monetary policy rate is not the lowest.
Yeah.
This is quite weird.
And
At
that's
subsidized rates, yes.
no, and that's exactly where I wanted to go next, because to me, I agree with you. I mean, it is the growth of BNDES and the development bank's financing over the last few years under DOMA 1 and late Lula was, I think, sixfold or something. But also more broadly, your presentations didn't talk much about the debt and credit situation in Latin America or in Brazil. And we've sort of become inculcated, I think for good reason, whether looking at Asia or US or Europe, to think about the credit situation as a key determinant going forward. So can you just say a few remarks, first Jose in general, and then Ilan in specific in Brazil, about the credit and debt situation on the private sector side?
Yeah, on the private sector, I won't talk about Brazil. I think that is it. But in Latin America in general, there has been some increase in debt, like everywhere in the world. The only country, I would say, that among the main countries that has a significant increase in debt in credit has been in Colombia, and it has been part of the boom. Whether financial system have been resilient, I'm fairly optimistic in the way that with the deceleration they have problems. So we had a recession, 60% depreciation, and a lot of turmoil a couple of years ago, and financial systems were resilient. The difference today is that we now may have a hike in interest rate, and at the same time we may start from high levels. So this is but I think that has been. I said it the other way around. If we have financial system a turmoil in Latin America, it would be really a shame and would be awful policymakers, because our history of crisis leads you to think that the first thing that central bankers and regulators are looking at the health of the financial system in this juncture. So I don't think that is perhaps some countries some problems, but nothing too systemic.
No, but I mean, just before Ilan responds, I mean, just to underline, you're saying something very interesting, Jose, which is that we did have a boom and party over in parts of Latin America that was more of the classic sort of just macro policy cycle, trade cycle. It wasn't the credit boom and bubble that we've seen in many other regions around this period, which may say something good about about Latin bank supervisors, or something bad about Latin financial underdevelopment. But it sounds like that's what you're telling us.
Yeah, well, I think that's fair.
Okay. Ilan, on Brazil?
I think Brazil is part of that. We did have, I think the credit growth was part of the party, coming from very low levels of credit of intermediation. Basically, it was 25% of GDP at the beginning of the cycle in 2002, 2003. It's now at 60%. So there was a major shift. At some point, there was an issue about leveraging of households, and not really corporates at the beginning, more households. There was a measure of prudential measures in 2010. So in terms of regulators, yes, I think they did the job. I think the central bank, which is the regulator in Brazil, did the job. They issued some prudential measures. And basically the private banks since 2010 they have been shifting the portfolios, reducing risk, leveraging. That's one of the reasons why I think Brazil decelerated earlier than the rest, which was actually a good thing. You needed to do that. In the part of the banking system that has not really adjusted was the public sector, banks. And I'm not talking here about BNDES,
right,
which you mentioned, but also the commercial banks. We do have a Banco do Brasil, it's the largest commercial bank, and we have Caixa Econômica, which is a saving and loan mortgage. And not only they did not adjust when you had the prudential measures, but they were instruments of countercyclical policies used by the government. So at this point, what we have is a financial system that has deleveraged in the private sector, but has leveraged in the public sector, which at the end of the day, it will end up being a fiscal issue.
That's very helpful. One last question before I turn to the audience. A political economy question for both of you as foreign policymakers, but also longtime observers. So Joachim Levy, who I think we all know, like, and respect, is now, for the reasons you said, Ilan, has been brought in to provide a credible fiscal policy. As good as he is, in most of the meetings I've had with him and the public statements, they don't seem to be front-loading very much. The fiscal adjustment, and in particular the quasi-fiscal adjustment, doesn't seem to be that ambitious. So just as from a general political economy point of view, my working hypothesis is usually you want to try to do a lot up front because first get it over with, second you don't know how long your the left-wing person who appointed you is going to put up with you. But maybe because of the political downturn that you spoke about, it's impossible to do more up front. I mean, how do you see the timing of how aggressive or gradualist Levy and to a lesser degree Tombini's got to go?
I don't think they actually have an option in terms of fiscal to be even more aggressive at this point. And not only because of the political situation, which is important, but when you talk to most of the specialists in the fiscal numbers, given the rigidities, so for example, when you hike minimum wage, when you give more transfers, it's very difficult to go back. Some legislation says it's impossible. You cannot reduce wages. You cannot. So there is a lot of rigidity that when you need to adjust, you need a couple of years to do it. I give them a hard time when they tell me this. I say, how come? I mean, we spend 40% of GDP. Why are you telling me you cannot do 1.5% of GDP? And people look, and we look at the numbers, the details, and the proof of the pudding is that Joachim Levy, in my view, is doing a lot. He's trying a lot, and he's getting only a bit. Even the 1.2%, which is his target, is a very challenging target this year. One of the reasons is that the revenues are collapsing. Economy is under recession, revenues are collapsing. Brazil is not used to revenues collapsing for the last 20 years. One, because of the boom. Second, because of the formalization of the economy. So revenues will keep increasing, and that's the reason you went from 20% of GDP to 40% of GDP tax burden. So you're not used to revenues falling, and now revenues are falling. So he has a very tough time. So every week, he announces a new measure. Last week was tax on banks, on VAT on banks. 2 weeks ago was a tax on financial revenues of corporates. He has his unemployment benefits. So every week he has. So my take today is that maybe the specialists are right, and things are really difficult to get when you have fiscal rigidities.
It's interesting. And I don't want to make it be unfair to Finance Minister Levy, but just ask Jose. I mean, you are familiar as a scholar, not just with experience in Chile, but the various stabilizations and austerity programs undertaken throughout Latin America. I mean, are you comfortable with the idea that 1.3% is a lot?
Yeah, I tend to agree, and I want just an example is with what Ilan said. The rigidities are amazing on the fiscal side. You can cut, you can stop, especially in countries that have relatively okay fiscal policies, not just a pork barrel that you can cut it from one day to the next. There was a center-right government, the previous one in Chile, that during 20 years they were saying that when they go to the government, they will cut taxes because they will be able to cut all the excesses in the government spending. And one of the latest speeches that I hear from the finance minister is a very typical Chilean thing that's otra cosa es con guitarra. Another thing is where you are in power is quite different because they had to raise taxes and they weren't able to. There was an earthquake too. But so it's for everybody. This is not a political bias, anything. It's so difficult. And there are so many rigidities that I think that, as you see the figures in Brazil, a 1.2% is quite ambitious. And I think that could be a way to go because they are not, also because they are not on the verge of fiscal collapse, which is another.
Just to give you, the 1.2 means you come from -1 in a recurrent rate. -1 to 2 means a 2.2 adjustment, which is.
Yeah. The Greeks could use you guys as ambassadors in Berlin. We have many distinguished friends who are going to ask questions now. If you raise your hand, I'll recognize you, Jessica. We'll either bring you a mic. If you could go to Anders and then there. First, at the back mic, and if you could identify yourself, please, for the web. Annika.
Oh,
you.
I start? Oh,
Yeah.
sorry, I thought you were giving...
No.
Thank you, Jose and Ilan. This is really... It's making me think I've
Could you
been...
identify yourself, please.
Oh, yes, Angel Ubide, Senior Fellow at Peterson Institute. I've been worried about Brazil, but I'm a little bit more worried after listening to Ilan. You didn't mention the exchange rate. And Brazil had a very, I don't know if that's the right word, successful program of FX intervention with the swaps. And then they decided to stop it. Can you give us a word on was it successful or not? Was it right or wrong? And what should they do? Shouldn't they let the currency basically overshoot to the downside now to help with the stabilization problem? Or that would be backfiring? Thank you.
Shall I answer?
Yes, please.
That's actually what I believe they're doing now. So I'm going to answer first what I think they're doing, and if it's good or bad, it's more difficult answer, but I think it's good, but it's not so straightforward. They have decided since March to basically stop intervening, which intervening in the case of Brazil means they were selling swap hedges to the corporates that needed hedge. And they have been doing it for the last 1.5 years, which means that the stock of swaps in the hands of the public is around 15% of GDP. That's basically what it is today. Since Joaquin came on with the adjustments, they said, let's do it for real. Let the exchange rate float, because a 4% current account deficit may not be, in this new world after the party is over, sustainable. You need to get adjustment, and the currency will help you. On top of that, when you are in a recession, the exchange rate can help you. So you don't want to lose that. So I think they went in that direction. The fear before was, if we let the currency overshoot, we're going to get inflation. If we get inflation, interest will be even higher. So they want to prolong the counter-cyclical policies, and that's the reason they repress prices, that's the reason they repress the currency, and this is basically over. The reason the answer for your question that is straight for good to just allow it to float is because we have been discussing in Latin America, in emerging markets, and in Brazil in particular, why do we have such a large amount of reserves? In the case of Brazil, the interest differential is huge. And you had basically 270 billion, 3 times the amount of swaps you just sold in reserves. And the answer was, when you have a crisis, when you have to adjust, those reserves are useful to buffer. So the first reaction of the government is, yes, I'm going to use that to buffer. But after a while, you realize that the party is really over. So there's no need to buffer something that will not come back. And I think that's what has changed this year.
Very interesting. Yeah, so Anders here, then the gentleman at the back, then Monica, and we'll take it from there, please.
I'll try to be short.
When I listen to what you're...
That's Anders Borg.
Yes, Anders Borg, I'm a former Minister of Finance of Sweden. Can I just make the reflection that when I'm listening to you, you're basically saying that Latin America needs long-term structural reforms in the labor market, in terms of education to bring up productivity, and in terms of internal and external openness, so you get more competition and therefore more productivity. All of those reforms are very difficult because in the short term, if you relax, if you increase labor market flexibility, people will get fired if it's a downturn, and the lower end of the wage curve will also slip downwards. So it's basically contractionary. If we look at countries that have done these kind of structural reforms and pulled through, in almost all the cases that I know of, a very large exchange rate depreciation has created the necessary demand to do that. If you look at Denmark or Finland or Ireland or Sweden or some of the 90s cases, you would talk about maybe 15 to 30% depreciation to start with, and then structural reforms, which makes this into a supply shock that alleviates the inflation pressure. So wouldn't the logical thing for the Brazilians to do something of that kind, actually have a very benign neglectance of the exchange rate and then try to do at least some of these structural reforms?
Yeah, go ahead.
Thank you, because I didn't have time to get into the reform. I just had the last slide saying we cannot get out of productivity gains. It's not going to be just labor incorporation. It's not going to be basically saving and investment for only that. So thank you for that, and I think it's clearly where you need to go. I made 2 points. One point is, in order to get there, and with the short-term cost, you do need new government, or a government with support to be able to lead, to absorb the cost in the short term in order to get better in the long run. This is not the case. This is a surviving government. It's a government that if you have a bit more of cost, they may flip. What does it mean, flip? People on the streets already asking for impeachment. So there's not really a lot of capital to do reforms if they are costly in the short run. So unfortunately, this is not the situation. And when I say my basic scenario is muddling through, is because I cannot see it. And that's why I had this slide where I divide in two, Dilma 2 and then later. Sometimes in Latin America, you need a lost decade or lost years in order to get reforms. And we have good examples. I think in the case of Mexico, my take is that they had a good run of reforms. But the average growth of Mexico in the last 20, 30 years was 2%.
Jose, do you want to add anything to this?
No, I think that it's different in countries. I think that in Chile, for example, today, there are reforms and we talk about productivity, anything, but I think that the big issue today is social policies and inclusion and having and becoming a high-income country, but high-income country for most people, not for just a few. And I think that that's the challenge, that without falling in policies that will impair the abilities to grow. So I think that that's the issue.
Let me, before I go to the next question, let me pick up on something Anders said, though, and it relates to something I know Jose and I have talked about, which is you all seem comfortable with Anders' interpretation of the Irish and other examples. But of course, there are also people in Europe who interpret things such as Italy got to devalue in 1992, and therefore they never had to do any structural reforms. So how do you see the dynamic of if you get a large depreciation, is that likely to encourage structural reforms? Is that likely to give an easy out? I mean, and it's probably some subtle combination thereof. I don't want to oversimplify, but that debate is very live, and so I was just wondering where you come down on that.
Yeah, that's a good point, because if the exchange rate it takes you faster, you may say, well, I don't need other things. But my take would be that the exchange rate will help to mitigate the slowdown, but there won't be a growth boom in the next years unless you really focus on productivity. Okay. I don't think that there is enough exchange rate, or that if enough also in a world which external demand is not buoyant, so it will be more difficult.
I completely understand the trade-off, but I will side with allowing the exchange rate to do its job, even though that will take a little pressure out of policymakers.
Very good. The gentleman at the back, Mike, and then Monica over there.
Okay, thank you. My name is Peter Bachfuss. I'm with the International Trade Union Confederation. It's a short question to Professor Goldfajn. One of your slides showed quite a steady decline in the Gini coefficient, and of course that's well known. I'd be interested to know what you think are the drivers of this steady decline, although we know it's from a very high level. And what do you expect will happen in the years to come? I mean, will the decline continue? Will it reverse? in light of your different scenarios? Thank you.
It has been a declining trend from a very high level, as you mentioned. Research has shown that the largest chunk of the decline is due to labor income growth at the base much higher than at the top. Just to give you a number people use, the 10% poor workers have been growing at Chinese rates of growth, while the 10% richer workers have been growing at, let's say, European growth rates. So this difference is what explains 80% of the decline in the Gini coefficient for very high levels. The government would like to say, and there is a little truth of that, that the transfer programs were very important. Transfer programs are programs directed to the very low income. That was important for poverty alleviation, but for income distribution did not really move the needle. So the party was on full employment, labor gains, concentrate the poor were the main responsible for the income redistribution.
Very good. Monica, and then on.
Monica DeBole here with the Peterson Institute. I'll just add something to what Ilan just said, and then I'll ask my question. It was also the minimum wage rule, right? The very, very generous minimum wage rule that we have in Brazil. It indexes minimum wages to GDP and inflation, but lagged GDP and lagged inflation. And this, together with growth, I think explains largely what happened to income distributions in Brazil, especially at the lower end of the income distribution. As for my question, I'm broadly in agreement with both of you in terms of the assessment of how difficult the challenges are going forward and how tough it's going to be for Brazil to generate this much primary surplus in 2015, and also another primary surplus of 2% of GDP in 2016. But my question is this. We have currently a change in the political scene in Brazil, which wasn't, I guess, we haven't really touched upon. And I think this is key. We do have a president in office. She's been in office for 100 days. Her approval ratings are down to 10%. And in recent weeks, there's been a significant change in how the government is operating. Essentially, as you know, the president has more or less outsourced the political articulation to her vice president, who is from the PMDB, the party that is within the governing coalition. The PMDB has always been part of transition governments in Brazil. So my question is this: can we interpret the current situation as a transition government? And if we can interpret the situation as a transition government, is there a possibility that some of the structural reforms that we need, and that obviously everyone is aware of that we need, could these actually get off the paper? Because I do see that we are not exactly in the muddling through scenario anymore. We were 3 months ago, but perhaps that's changed. So I wanted to get your impressions on that.
Well, I don't think we were muddling through. We were straight into crisis. I mean, the growth of this quarter will be, just this one will be minus 2.5%, 3%. So this is outright crisis. We get a downgrade from S&P. Markets are pricing Brazilian debt to junk. So no muddling through, that's a crisis. The question is are you going to get out of the crisis? Are you muddling through? Or you can get even a more optimistic scenario where suddenly you have the new political configuration that you get reforms. Unfortunately, this last more optimistic scenario is not here. I cannot see this center party, PMDB, embracing the reforms, paying the political costs. These are not the guys. The guys are the guys that are very efficient in terms of being in the coalition, but not really leading the government. If you really do the structural reform, you pay the cost, these guys are going to be out, and that's not the way I believe they operate. Unfortunately, When I see the finance minister and I see the economic team, they really want to do the things. Last week I was in an announcement with Minister Joaquin Levy, and he was doing a lot of effort. He basically said, look, there's BNDES money, it's subsidized, it represents half of the credit, not BNDES, but half of the credit. I'm going to do the following. Everybody that gets subsidized rates has to also issue at market rates the debentures so that we're deepening the capital markets in Brazil. Is it good? But at least it goes in the right direction to have some. You cannot get rid of BNDES one day to the other. These are things that take some time. So their mindset is, yes, let's do some things that uses the current situation to improve. But really to have a huge reforms, I cannot see it. I mean, you see the difficulties have countries like Mexico that are reforming, Chile, you're under discussion of reforms. It's very difficult. You really need a lot of support. It's not a transition government with a few guys from the center that always took advantage of being in the coalition that you really could lead the country. I hope I'm wrong. I hope that next time I'm here, I'll tell you, look, things really changed. These guys opened their eyes. The president just left it to the PMDB. They were crooks, but they're not anymore. They're now reformers. I just don't believe that.
Whether or not you can say that, we'll definitely have you back. But yes, go ahead.
A point that said Monica, because she mentioned about the income distribution issue, and she made a point, and which I have been all the time for very, I don't know, I have no issue, which is one of the reasons for the decline in income distribution in Brazil is the increase in minimum wage. So I would conclude, if that's the case for the rest of Latin America, that's quite easy to reduce income distribution inequality, just to raise minimum wages. But we had the experience in Chile in the late 90s that there was a rapid increase in wages and the minimum wage increased, but there was a lot of job destruction and not job creation. There was a decline in employment. So the income of the people receiving minimum wage or the low, it declined because there was more effect on employment. But I think that this is an issue which I think that it could be different across countries. Perhaps in Brazil, minimum wages were excessively low, so they were not biting, and you can increase them. But I think that it's quite an issue that one has to look at very careful, because the interpretation and the implications, especially regarding inequality, are quite important.
Great. Gentleman here.
But
I am Arturo Porsekansky with American University. So thank you very much for wonderful presentations. But I want to go back to the beginning slides of Jose. Why have the forecasts been so wrong? We expected soft landings, and we've gotten some crash landings. When you think about it, you know, for 2-3 years now, the forecast incorporated that commodity prices would soften. If anything, nobody expected that oil would stay as high as it did until recently. So if anything, we got better than we bargained. Likewise, on the Fed hike and the tapering, so far, so good, right? The tapering has not really affected the structure of U.S. interest rates. And if anything, the news out of Europe and so on is that we're going to have lower interest rates for longer than we figured. So if anything, the reality should have been better than the forecast, it seems to me. So what went wrong? And I think it's important to have the right analysis in order to have the right prescription. I will just offer something for your comment. I think something went terribly wrong with the animal spirits of investment in several of the countries. And I think it has something to do with all the populist rhetoric against capitalism and in favor of, you know, helping the poor, including by government decree and all that stuff.
Can you
I think so. What do you think? Why the forecast went wrong? If it's on the investment side.
Before my colleagues answer, I just want to, perhaps it's unnecessary, but I want to embed this very astute question and Jose's powerful initial slides in the larger discussion that's going on this week. I chaired a session at the meetings 2 days ago with Summers and Rajan talking about new normal in Asia and about how we've disappointed versus forecasts there. That it's as the WEOs pointed out, emerging market growth is down. In fact, emerging market growth is down in Asia far more versus forecast than in Latin America. Meanwhile, we had the Summers-Pritchett paper on regression to the mean saying we shouldn't expect too much from China and India. Our colleague here at Peterson Institute, Paolo Moro, and some co-authors have come out with some stuff about the repeated proclivity to have overly optimistic forecasts. You know, there is a general issue here, not just the one you're talking about Latin America. So with that context, I'm particularly interested in my colleague's take on this. And Jose, why don't we start with you, because you did have those opening slides.
I would tend to agree with Arturo 100% that there is a rhetoric, there is an animal spirits effect on all of these, which happen in all cycles, but there may be something. But there are two things that I also basically I'm a little bit uneasy on blaming everything on that. Is that first, this is not just happening in Latin America, it happened in Asia, it happened everywhere. I saw this graph that was now you can say, well, this happened everywhere too. So this is in Asia, everywhere there is this sort of discontent, this populist rhetoric. If you see the decline in investment, Peru, the decline in investment, Peru is one of the most amazing cases. I think that the decline in investment was about 1% of GDP, according to the central bank forecast, and the decline in output was more than the forecast was more than 3 percentage points. So we have seen decline in investment very associated to commodities, but not just a plummeting investment. So now, and the Peru wouldn't be the most populist rhetoric also in Latin America. So there is something more than that. And yeah, it coincides, but I wouldn't put kind of the whole blame, because this is quite a general phenomenon in all emerging markets. So
do you want to add anything, Ilan?
Yeah, just short. I think animal spirits is part of the story. It's an endogenous part of the story. I don't think it's the exogenous. I think that the deceleration of China for most of the region is the external shock. For several years, you have countercyclical policy, China decelerating slowly. The real effect on commodities was very recent, as Jose De Gregorio just showed. And then you had countercyclical policies within the region. At some point, they ran out of its course and countries decelerate faster.
Very good. We're getting near the end of our time. So Jessica, if you could give the lady in the red blouse and then the gentleman here. Yes, then we'll get both questions, please.
I'm Barbara Stallings from Brown University. Alejandro Foxley and I recently edited a book on some of these same kinds of issues, but taking a more structural micro approach than we have represented up on the stage.
That was intentional, by the way.
Okay. I'm not surprised. That's what you guys do. But
we do it because it's right.
But here's the disconnect. Both of the presentations ended with what we really need to do is raise productivity. And it's not really clear what macroeconomists mean by productivity. In our book, we brought in some Asian economists and sociologists to ask them what Asia might have to say to Latin America about productivity. And they say it's a question of doing more research and development, of doing more innovation, of training people in science and technology. These are all long-term kinds of processes. They say is to escape the middle income trap, innovation is essential. But it's not just a question of what can we do in the next post-Dilma or even Dilma 2. What can we do to raise productivity for the long term for Latin America?
Suman, or hold it, wait for the mic.
Suman Berry from Shell. Two quick questions, one on Brazil and one taking off on what Barbara said. In the macro picture that you presented then, Ilan, what is the exact significance of the Petrobras scandal Is it just political capital? Is it investment? And the broader question then, in your adjustment mechanism, what would trigger any kind of an investment recovery? And just an analytic question between the two presentations. Are both of you talking about total factor productivity, or Jose, were you focused more on labor productivity, and Ilan, were you more focused on TFP? And how would you relate either of those to what Barbara's just said?
And before you respond, let me just put out another plea for the macro side. At this, as has been pointed out by several people, but Larry Summers put it best, I think, the other day. This idea of the middle income trap is one where the ratio of amount of citation and discussion of it to the amount of econometric proof is infinite. Right before, in other words, there's no empirical support for it. In other words, our colleague Arvind Subramanian, who is now Chief Economic Advisor to Prime Minister Modi in India, did a presentation here shortly before he left, in which he had gone through the cross-sectional data and also found no evidence for the middle income trap. So I think we want to be a little careful about invoking that, and clearly if you look at recent Asian productivity data, it tells you that a lot of countries there are not doing so great on the productivity front either. With that cheery note, let me turn to my colleagues on Latin American productivity.
No, just because everybody wants to know about Brazil, just a general comment on what Barbara said also about productivity. I don't like to talk too much about productivity because we're always economists at the end, we end up saying productivity, but I am kind of moving that direction because productivity growth in Latin America has been extremely low. And I was economy minister. We have been discussing in the government coalition for more than 25 years how to do with productivity and how to do with R&D and how to be more innovative, and that's endogenous. So R&D innovation will come when there are projects, where the ideas. So I think that it's difficult to say it, but in Brazil it's easier because Brazil has to open the economy and get rid of many distortions. I think that the trick is, and that will give them a boost.
That's easy to say.
Yeah, that's easy to say. In Chile, it's more complicated. I think that it has a lot to do with education, with the quality of education. It will take time, and the other thing, it has to be with social issues, that the effort and initiative and the feeling that when you go to the market, it's not the bigger that the one that will win. So you need better laws for competition and more institutions. And I don't know that much about what productivity will come, because if I would know, I would be doing it. And so that's what I'm an academic and a policy maker.
Ilan?
I basically agree with Jose's point on productivity. I was speaking TFP. Let me answer the Petrobras question, which is the one left. Petrobras is quite important. It's a micro that's macro. Only the decision of Petrobras to reduce investment by 30% already shaved GDP forecast. 10% of the country's investment is directly Petrobras. If you count all the links, the oil and gas, it's even more. On top of that, the Petrobras affairs has the contractors involved. Basically, all the contractors, big contractors in the country. And they are finding it difficult to get financing from the public sector. No public official service will sign a loan, an agreement to a contractor, because they don't know if they will be swapped into the investigations. So this has paralyzed. Part of the 1.5% decline in growth has to do with the Petrobras affair. Probably this is going to be, some of it will be temporary, some will be more permanent. The temporary part will be Petrobras has to issue its balance numbers by the end of this month. They are raising some indication that they will do. The market has improved because of that. So there are things that are going to make it a little better, but the investigations are going to take years. And you will need to reorganize production across Petrobras, the distributors, the contractors.
Very good. Thank you all for joining us on this beautiful morning. Thanks especially to Ilan Goldfajn, who gave a special appearance to us and took advantage of us being in Washington, and to my colleague, Jose De Gregorio, who every time he's with us brings something great, and in this case brought something great and a partner in crime, which was terrific. We'll look forward to more of this discussion ongoing, and I wish the rest of you a good end to the annual meetings festival. This meeting is adjourned.
Very good.
Thank you so much for doing it.
Thank you
That
for the
was
opportunity.
terrific. No, anytime.